Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have an amazing guest for you today. He's an industry thought leader, a tech innovator. He's got a wealth of lending knowledge and technology expertise. He does weekly videos. He provides insights. He's a speaker. The list could go on and on. I couldn't be more pleased to welcome back not only this mortgage industry guru, everyone will know him once I announce him, but he's also a dear friend. Please help me welcome Kevin Peranio, Chief Lending Officer at PRMG.
Thank you so much. You know I love it. Whenever you invite me to Fintech Hunting, it's always an honor to be on here, so thank you so much.
Well, I greatly appreciate you joining. You've been one of the first guests. You've been on multiple times. I love having you because you always provide great insights. You're candid, you're thoughtful. So let's hit the ground running with what are some of the things you see in the mortgage industry for 2023? Everyone's talking, it's January, everyone wants to know what's going to happen with the industry. And we don't have crystal balls, but what do you see? Because you watch a lot of key indicators out there.
Mm-hmm. Well, I think it's going to be a purchase-dominated year. And usually when I hear that question, I want to make sure people's minds are right. You make sure that, no matter what's coming your way, have you reset, and it sounds kind of cheesy. And I know that, it's a new year and there is something to it. It's not just the calendar rolling over. It's, the days getting brighter and longer. We're past the winter solstice. The worst of the darkness is over. And seasonally, spring purchase season is upon us. And so I just want to make sure people just snap out of it, right? If they're in a funk, right? And you know what? It's natural. We went on a big roller coaster high the last couple of years, and the last 6 months of last year were a grind, and that's tested some people. So I just want to make sure people are ready. There's another test coming, and it's more of a traditional test where there's going to be an abundance of business. There are more purchases to go out and get. Rates are going to improve, and so it becomes a different kind of test. And the good news is it's not too late to start building into that and building on top of your experience from the past and make everything and all the action you've done prior, even better going forward to prepare to have a windfall year in 2023.
Well, and I couldn't agree more. And I think when people have that right perspective, and like you said, we're on that huge roller coaster, but historically, if you look at it, there's still going to be trillions of dollars of loans originated. There's going to be a lot of business out there. And I think some of it is going to challenge people to go back to some of the fundamentals, some of the basic blocking and tackling. Have you established realtor relationships? I talk to some people, I do some coaching, and what do you mean? I got to go to open houses? Yeah. I mean, if you want to really own your local market and really know the realtors, you're going to have to do that. So what do you think are some of the things that people have to go back to the basics of doing if they want to be successful in 2023?
Well, let's just take open house for a second there. There's going to be less supply. And I think that with less supply, we're going to see this wave of demographic demand. This first-time home buyers that turn a certain age, it's 33, right? Household formation. Although I saw a stat out there that showed in the last 6 months of the last half of the year, with rates rising to where they did, that the first-time home buyer age went up as well to 36. So people
really?
Maybe a little more. Yeah. And I don't know if that stat's going to stick, but, there was less volume out there and higher rates. And so it's more expensive to get into a house the last 6 months of last year. And so, naturally you would think maybe people with a little more income and a little bit more assets and a little bit more saving, that maybe they were most likely to go after the fewer deals that were out there and be able to afford to pay the higher rate at the higher price of the homes. I apologize. I don't know where I saw that, but I did see it somewhere. But, whether it's 33 or whatever in that age, look, people need a roof over their head. They need to stop renting. They need to stop paying a landlord 100% interest rate, right? So whatever the going rate is, it's cheaper than 100%. So, you talk about open houses. That's a great way to do it. But with the lack of supply, it's really about the listing. It's about finding the actual house and pivoting off of that. So we're doing a ton of marketing for sign writers out in the front yard. We've got this incredible QR code called WISP that we're putting out on all of our marketing collateral we're rolling out. Basically, whenever anybody scans it, you're texting immediately. You're texting, right? That's what happens. Doesn't pull up some dumb form or a web page or the menu that you can't touch because everyone's sick. You know, the QR code just pulls you right into a text message, and you're now texting with whoever that person is. Snapshot in time. They looked at your marketing collateral. They looked at your sign. They looked at your open house flyer. You don't even need to be there, and you're everywhere, and you're present. And so things like that, and then pivoting off of the listing and helping listing agents, boosting their web pages for them, helping them get to more bars and sift through it. I mean, that's how our originators are providing value, and I think any originator can snag that strategy and be more valuable and pivot off the actual house, which there are less and less supply of.
Right. Well, and I love that speed to responsiveness is critical, right? Soon as they're there, because you're getting text message, instantly you can respond and your LOs can respond. And we know, I mean, from a lot of the different studies that I've seen, the amount of time it takes you to get back to a prospect, the sooner you do it, the quicker you had. I think it's the 21% higher rate if you respond within 5 minutes versus waiting a half hour.
Oh, I mean, that's it. It's like 90%, 90 or 95% fallout if you don't respond within 5 minutes. If you respond within 1 minute, it's like a huge conversion ratio. So you got like that first 1 or 5 minutes just to say, even if it's just like, hey, I hear you, I see you, I recognize you, I'm going to serve you. Let's schedule time to get together. I'm going to make sure that I give you the best experience possible, and we're going to get you in this house. Let's put something on my calendar for this, this, and this. Boom, done. So, I mean, think about that. Like someone scans your QR code, they get a text pre-filled, send you a text, now you have their information in your CRM, number one, then you can redirect them back, and then you can give them in that text message thread your Calendly, your website, maybe a couple of things. You could even have a QR code specific to that house or to the VA campaign or the marketing you did or the 2-1 buy down. I mean, every single thing could be tailored and it can redirect back instantly. That way you keep them on the hook and you don't have to have a human being to do it for you. So I agree with you 100%. It's about immediacy, especially with Gen Z, who's even faster than millennials, backing them up there.
Exactly. Okay, Pete, you do a great job as a lender having a very good pulse of what's going on in technology. You just gave a perfect example, but what are some of the technologies you're excited about? What are some of the areas that you think lenders can get an uplift? I hear a lot about back-end processes and efficiencies and cutting down underwriting steps. You just used a great point of sale tool. What are some of the areas where lenders are investing in 2023?
It's all about reducing friction, compressing time, and then being able to scale the business. And so, I always talk about how much time can you get back, right? The one thing you can't get back, is all this time that you spent. So what are you spending it on? Are you deepening relationships? Are you providing value to a consumer or a realtor? And then of course, doing it in a shorter amount of time with higher impact and converting. And so that's what we work on all the time. I had a really fantastic conversation with a gentleman named Kirk Donaldson, who created a company called Halcyon. And what they do is they have this API integration between the IRS and their company. And so now you're getting tax transcript information like instantly, but the hook for the borrower is you're offering tax prep for that borrower. So if they need to do their tax, you're getting tax prep done. You're also getting information directly from the IRS without having to fill out the 4506 form or get the borrower to call. Then they got to wait. Then you got to wait. I mean, how do you compress the time down and reduce the friction there for stuff like that? That's something we're working on the back end. Points of sale. We love Blend. I mean, there's plenty of them that are out there that are good. We think Blend is absolutely the best of the business, and that's totally up for argument. Not with me, but why do people take loan applications? I mean, why do you sit there over the phone and go line by line with your borrower? Because you've always done it? Are you establishing a relationship when you say, are you a co-endorser on a note? Are you a first-time home buyer? How many dependents do you have? How old are they? Send them a link, let them fill it out, read it. Then when you get on the phone, you're like, hey, I see you're a first-time home buyer and you got 4 kids, Kevin. I see that they're 3, 5, 7, and 9. Are you looking to get into this school district over here? Like that, what I just did in the same amount of time of what I said before is so much more impactful. Actually took less time, by the way. And I prepared before I got on the phone with the borrower, which impresses them. And I was able to provide value for something that probably means more than asking them whether they're a co-endorser or a no. I'm talking about their kids. So for me, it's providing value like that.
See, I love that. And I love it. You were able to personalize it by using and leveraging technology. You instantly said, hey, Kevin, you've got 4 kids. Here's their age, school district. You now had a perfect personalized pitch to that person. That's adding real value. We talk all the time. You hear this used all the time in the industry. We got to add value. You got to add value. But you talk to a lot of loan officers and they don't know how to do that. And you just instantly, within about 5 seconds, gave a perfect example of how to do that. Love it.
And you know, there's nothing, I mean, you know, I've seen some social media out there where people disparage the term providing value, but that's what it's all about. Like, it's about value. Like, my time is valuable. My time is valuable. So, and you know, it's not always about money. It's about what I want to do with it. So to me, my time is priceless. It's not about price. If I can get an hour back every day and invest it in my family and my children, it has nothing to do with price. Spending an hour more a day with my kids is priceless. So value, time compression, that is powerful stuff. Providing value in a time-efficient manner, that is the whole game right now. And it's fun. And I got to tell you, this tech that's coming out, it just keeps getting better and better. You know, we talked about texting, you know, there's great CRMs out there. I mean, obviously, you know, Josh and them, you know, at Accelerate, they've got fantastic. I know this isn't a plug for them, but I love talking about it because, you know, they built a Twilio backbone to be able to text your up funnel stuff, your sales prospecting part of the sales funnel. You know, you're texting, you're immediate, you're talking. That's how people want to communicate nowadays. I can get so much more done texting than I can, you know, maybe being on a phone call. And so, you know, again, there's just so many different great ways to leverage technology to be deflationary on cost and to compress time and get your time back, which then helps you provide even more value.
Oh, excellent insight. Now let's shift gears a little. Let's talk about the importance of using and leveraging video, digital tools. I know you're part of a new home channel that people can see your videos on. Tell us a little bit about that, because you do such a great job of putting yourself out there and sharing great insights. I'd love our listeners to hear a little bit about that.
Yeah, I appreciate that. I think, you know, just it's kind of it's about building a community. I think that's really where I started. I got on LinkedIn pretty heavy a few years ago, you know, to build a community and manage my reputation. You know, I can't have other people out there, you know, talking about PRMG or talking about me or talking about my company's business model. I mean, you know, my company, we put originators over everything. We are not self-serving. We're not trying to serve our own business model. We're not trying to serve our own bottom line. We serve originators. And so the story of PRMG and the story of Kevin Peranio, KP, and the reason I do KP is because my last name's hard to pronounce, and I just don't want people to feel embarrassed when they mess it up. You know, the story is serving others. And, you know, you and I both have a Christian background, and many people are humble servants that are selfless, and they're not trying to, you know, pimp out their own business model and, you know, just make a buck, right? And so when you approach this business and you approach this career and you approach life in a servant manner, you know, controlling your reputation and building a sense of community is very important. So for me, I freely, literally, well, it's not free. Now I'm starting to pay for editors, you know, and then of course your time's not free, right? But, right. You know, I give away these nuggets. I give away talking points. I give away strategies because there's an abundance of business out there. I mean, let's say I was self-serving. I can't hire every single originator out there, you know, regardless of channel. I can't get all the business. It's just not possible. You look at cell phones. I mean, even Apple doesn't have complete dominance in cell phone market share. So what I would say is, being out there and being able to communicate at scale requires the use of social media. So, during the pandemic, when things were going crazy on March of 20, everyone's like, what's going on with my rate sheet? Where's the yield spread going? Is this 08 again? Are we going under? And instead of fielding 1,000 phone calls a day, I just started putting out literally daily LinkedIn videos. And so I was getting thousands and thousands of hits every day on every single video to have a conversation and answer questions at scale and help serve the broader community, because we're all going through it together. It was a global pandemic that, set off this firestorm in our industry, and people wanted to know. And so for me, at our core, originators in every channel, we are teaching financial literacy at scale. And what better way to communicate at scale than to throw out some videos or throw out some long form if you're uncomfortable, getting with the uncomfortable and getting on video. By the way, if you're on video, you don't have to go live. You can always edit. You could throw out some bomb videos and just post on a schedule. You could do some more organic stuff. Heck, just do some Instagram storyboards to your immediate sphere. Put some inspirational quotes, whatever gets you going. But you just can't be silent, and you can't be invisible. Even if you don't want to dress up and get all prettied up for the camera, which clearly I've done with all my makeup and this gigantic nose here.
Yeah, this is about as good as it gets here, so we got to deal with it.
Sorry, everybody. Sorry, not an Instagram model over here. I apologize.
One of the other things is we're winding down, and you and I could talk for hours, and I love having discussions with you. Talk to me about, now that we're coming out of the pandemic, however people want to define that, and people are now out and open, and there's conferences and everything, the importance of still meshing digital with in-person meetings. Because I think what I've seen some people do to a detriment is they went from one extreme to the other. Okay, COVID, I got to do everything digital. And now that things opened up, they've almost stopped doing digital and they're just doing live events. Why do you think it's important to do both?
Yeah, you have to do both. We're in a hybrid work, model now. I don't think, let's use the spectrum, right? So, you've got fully remote, fully digital, fully away from human beings in contact, and all things, Zoom video. Then you've got, traditional, come into the office 9 to 5, 5 days a week and show up. The workforce has definitely, it went all the way over to the Zoom, and now it's actually coming back a little bit. So it'll be interesting to see where it lands. I saw Bob Iger, who retook over as the CEO of Disney. I saw announced on LinkedIn today on one of the articles that he has a return to office policy starting March 1st for 4 days a week. So it's kind of interesting, right? So it's kind of a hybrid, right? So it's not a 5-day work week, but you may have to work 5 days, but you got to do it 4 in the office. And so now you're back to, working together with your peers and walking around and smelling the idiot who warmed up the salmon in the, microwave during lunch, or burnt the popcorn. Yeah. So, there's something to it. It's funny. We just had our once a month and first of the year senior management meeting yesterday. And we had this discussion, we want meetings with cameras on. We want people to be more engaged. We want to make sure that people are rooted. And, we to inspect what we expect, right? So we need to make sure that if we're going to continue to be digital, that we're still emotionally attached to our cause, our company, and the people we serve.
Well, like I said, you are always a wealth of knowledge. I hope to see you at IMB coming up in a couple of weeks. But KP,
yes,
thank
sir.
you so much for always giving of your time, adding value. Thank you for being a guest on this episode of the Fintech Hunting Podcast.
Thank you, Michael.